TATA Nifty India Digital ETF, NFO. Will this NFO help you create long-term wealth? Will this NFO help you achieve your financial goals? Let us analyze and evaluate. Hi, this is Ramalingam from holisticinvestment.in. We help individual investors like you to take right financial and investment decision. Before going into analysis and review, first let us understand the key features of this NFO. This NFO opens on 14th March and it is open till 25th March. This comes under the equity category of sectoral technology. This comes as an exchange traded fund. Benchmark index is Nifty India Digital. Minimum investment is just 5,000 rupees. The primary objective of this particular ETF is to generate returns by investing in a basket of Nifty India digital index stocks, and it is aiming to create long-term wealth. So as a strategy, it is very simple. They will be investing in the Nifty India digital index in the same weightage, in the same set of companies. They will be doing it. There is no like picking and choosing stocks. They'll be replicating, mimicking, mirroring Nifty India Digital Index. Actually, Nifty India Digital Index aims to track the performance of the India digital theme with the largest 30 stocks in the digital theme. Right? So this particular ETF will mimic and replicate Nifty India Digital Index, same set of companies, the same weightage, they'll be doing it. The top constituents by weightage in this particular indexes: Bharti Airtel, Tata Consultancy Service, Indian Railway Catering and Tourism, IRCTC, Infosys, HCL, Tata Communications, InfoEdge, Tech Mahindra, Wipro, Honeywell. These are all the top constituents by weightage. What is the past performance of this particular index? In the last 2 months, February and January of this year, this index has delivered 14.99% negative return. In the last 1 year, this index has appreciated by 25.96%. In the last 5 years, the CAGR annualized return is 15.28% return. If you look at this particular graph, from 2006 to 2014, there is not much of growth. The growth has happened after 2014 only. It is an important observation we have to make. From 2006 to 2014, this particular index has not appreciated much. Sectoral weightage, highly spread across 5 sectors: IT, telecom, consumer services, industrial, manufacturing. So these are all the 5 sectors based on which this particular index has got constructed. The Digital India theme stocks are available predominantly in these 5 sectors only. As we have analyzed the key features of this particular index and also the past performance of this index, now is the time to evaluate this particular ETF, Tata Nifty India Digital ETF. What are all the advantages? When we did our research, what are all the key findings which are in favor of this particular NFO? Let us see. This fund is diversified among top performing companies in Digital India theme. Yes, 5 sectors and multiple companies. Among this particular theme, this particular ETF is diversified across 30 stocks. In 5 sectors, it is diversified. There is a limited amount of diversification available. Then, if you are an investor who is looking for Digital India theme with low expense ratio, then definitely this can be a good option because index funds come with a good, low expense ratio. That way, this particular fund comes with a low expense ratio, and you will be able to mimic the entire index, Digital India theme index. You will be able to mimic. If the Digital India theme performs and delivers, and as an investor, if you have invested in this ETF, you will be getting a reasonably a good return. Compared to an actively managed fund in Digital India theme, this particular fund can deliver low expense ratio. Comparatively low expense ratio is possible compared to an actively managed fund because this is a passively managed ETF. This is actually suitable for aggressive investors who are bullish on Digital India theme. If you are a conservative investor, as this is kind of a thematic sectoral index, the risk is higher. So if you are an aggressive investor who is willing to take sectoral thematic calls, then definitely this is suitable to you. And you have to be bullish on this theme. So these are the two pre-qualification to enter into this particular ETF. We have analyzed the advantages, pros of this particular NFO when we did the initial observation. What are all the cons? What are all the disadvantages, potential demerits? Let us list down our key findings. As this is an equity index fund, this is not suitable for short-term investors. This is only for long-term investors who can stay the course for 7 years plus regardless of ups and downs. As it is a sectoral fund, I would suggest 10-year plus time frame. If you look at it in the graph, 2006 to 2014, there was no major growth. There were a lot of ups and downs. So 10-year plus time frame for a sectoral thematic fund, 10-year plus should be the time frame. If you got a lesser time frame, then this NFO is not for you. Someone who's a first-time investor, someone who's looking to build a core portfolio, for them this is not a good fund to have. A core portfolio should have a well diversified across multiple themes and multiple sectors. As this is limited to one theme and 5 sectors, so this is not a good fund to have in your core portfolio. As it is an index fund, it is going to mimic and mirror the index. It is not aimed to beat the index. It will simply mimic and mirror the returns of index. This fund manager will not be able to generate any alpha. In the actively managed fund, they will pick and choose the best stocks in the index. So they will be able to outperform the index. Here it is not possible for the fund manager to outperform the index. They will be mimicking same returns, similar returns adjusted for tracking error and expense ratio. They will be delivering a similar return of the index. Because of the expense ratio and trading costs and the tracking errors, this fund will outperform, this fund will underperform the index. This fund will deliver lesser returns compared to the index because of the fees, cost and tracking errors. This fund is not flexible. This fund is not dynamically managed when compared to an actively managed fund. In the actively managed fund, the fund manager can move from one sector to another sector dynamically. If the IT sector is doing well, he can go overweight on IT sector. If the later on if the IT sector outlook becomes dull and outlook for the services sector is good, he can move the weightage from IT sector to services sector. It is practically not possible here. So this fund is not flexible. This here the mandate is to simply mimic and mirror the index. Whatever the weightage given in the index, that has to be blindly followed. The fund manager cannot take a flexible dynamic call based on the market outlook. He will not be able to do because it is a sectoral thematic fund. This fund will have higher beta compared to a diversified index. So this fund can add more volatility to your portfolio. This will bring kind of instability to your portfolio. Because it is a digital India theme, the companies in this particular theme, if you look at it, sustainability of these companies are question mark, right? 25 years from now, whether the companies in this particular index will survive or not, it's a question mark, right? Companies like Nokia, companies like Yahoo, they went into trouble, right? In the year 2000, if someone could have told Yahoo will become an outdated company, we could not have believed. In the year like 2005, if someone could have told you Nokia will become an outdated company, like we would not have believed. But they became an outdated company now because someone entered. So such sustainability is a major challenge. If it is a consumer goods company like Nestle or ITC, then this kind of sustainability challenge is not there. Visualizing a company after 25 years in digital India theme seems to be tough. So sustainability is a major challenge. So because of that, companies in this particular index has got a higher probability compared to the other FMCG sectors or pharma sectors. These companies have got possibility to destroy our wealth in the long run. So sustainability is a question mark. Then these sectors or the companies in this particular index are easy to disrupt. Geo came and put pressure on all telecommunication companies, right? So it is an easy to disrupt, and the customers in these companies are not loyal. There's no brand loyalty. Like if I am using a Maggie noodle, if I am using an Ashirwad Atta, like I am attached to the brand, right? Whereas if I am using an Airtel connection, I'm not attached to the brand. If connectivity seems to be less, if I am moving to a new place and the connectivity seems to be less, I may move into another brand where the connectivity is good, right? So I'm comfortable moving, porting my number from Airtel to Vodafone, Vodafone to Geo, Geo to a new player. It is possible, right? Whereas will I change my noodles from Maggie to Top Ramen easily? No, because I am moving my Atta from Ashirwad to another Atta, it is not that easy. Brand loyalty is much higher. These industries are easy to disrupt. That we have to remember. And control of capital management. Suddenly, these companies may demand a higher additional capital. When only 3G was there, when 4G got introduced, Bharti Airtel needed additional money, right? Suddenly, Facebook needed additional capital to acquire WhatsApp. So these things, or all of a sudden they have to do it. These things are not part of their business plan, but they have to do it. So capital management is not completely under the control of the board of directors. Depends on the external environment. They have to suddenly pump in more capital. So this is a challenge with the companies in the digital India theme. Concentration risk, as it is diversified only within 5 sectors, there's a concentration risk. It is not a well diversified portfolio. If the digital India theme underperforms, like between 2006 to 2014, this particular fund can underperform. As it is an index fund, it is a passively managed fund. They will not pick and choose the best stocks in the index. They will buy the entire index without doing any analysis on the stocks. Because they are not doing any analysis, they will not look at the balance sheet, they will not look at the BP ratio, what is going to be the management's vision, they will not look at anything. So proper fundamental or technical analysis is not done. In this case, they will be simply buying the entire index. So these are all the disadvantages of this particular NFO. Now, you may ask me a question: do I have to invest in this fund or do I have to avoid this? It depends upon what kind of investor are you, right? This fund is good or bad, depends upon what kind of investor are you. If you are a first time investor and a conservative investor, you should avoid this fund, right? There are already existing digital India index funds with a less expense ratio and less tracking error. So why should you choose this fund, which is not proven with low expense ratio, low tracking error? Now, these two abilities are very important for any index fund. These two abilities are yet to be tested. It is an untested thing. So why don't we choose a proven existing digital India index fund compared to this NFO? If you are looking for market beating returns or dynamic fund management, it is not possible with this particular fund. You have to choose only actively managed fund. If you are not sure when to enter into digital India theme and when to come out, then you should avoid this fund. Whenever you are investing in any sector fund or thematic fund, you should know the outlook of this particular theme, particular sector and then enter, you should also know when to exit. In a diversified equity fund, the fund manager will decide which sector to give over allocation, give over weightage based on the outlook. He can also dynamically change the allocation. Here it is not possible. So the responsibility to enter into a theme and exit from a theme lies with the investor. So if you know only when to enter and when to exit, you can choose. If you don't know, you have to avoid this. If you are an experimental investor and an aggressive investor who want to invest in all the NFOs or ETFs on experimental basis, then you can start with the minimum investment, right? Again, this is not for your core portfolio, not for a first time investor. You have to avoid this. Fine, we have given you a detailed analysis review of this particular ETF NFO. If you have any additional questions related to this particular NFO or any other investment options, feel free to book a free appointment with our financial planner by clicking the link given in the description box of this video. By the way, will you be interested to attend insightful investment webinars? Yes, we are organizing an interesting webinar regularly. The next upcoming webinar link is given below this video in the link. Please register for the upcoming webinar, and we have an interesting topics lined up. You will be definitely discovering good long-term investment strategies to create wealth through this webinar. So far, if you are not subscribed to our YouTube channel, please subscribe today. I'll upload regular videos on a daily basis. We'll meet you soon. Bye.